Again, friends, welcome. My name is Stephen Fetter. I'm your host for the evening and delighted to be with you. I manage the United in Learning program for the General Counsel Office, and it is a delight and a privilege to have the opportunity to connect all of us from across the whole country. These are such extraordinary times, and it's amazing to me how much new stuff there is every week as we come back on a Wednesday night. So without further ado, let me turn things over to Eric. And Eric, you can introduce your guests tonight. We're glad to have them with us.
Will do. First of all, I'd like to, folks know Clyde and have seen the impressive bio. I continue to refer to him as my CRA and general church accounting guru. And you've heard his credentials, but tonight joining us as well is Kendra Fry. And Kendra wears all kinds of interesting hats and around the church. But one of her roles is General Manager of Trinity St. Paul Center for the Faith, Justice, and the Arts. And I would say that if that isn't the single most utilized building in the country, it's got to be in the top 2 or 3. And so Kendra has always been on the leading edge of building related issues and understanding programs and trying to figure out how to maximize building use. And of course, during a time like this, trying to understand how to keep going when the building's closed. So Kendra is joining us tonight, having done a fair bit of work with the Ontario Nonprofit Network and others lobbying the government around the Emergency Rent Assistance Program. So, and thank you, Kendra, for joining us. As we kick off, we thought you might appreciate a different voice for our land acknowledgement. So Clyde, you're out in Scarborough.
It's not quite different enough because you've heard me all before, but it's a little bit different here. And the land acknowledgement for Scarborough, which is in the northeast corner of Toronto, where I'm doing this broadcast from. And the land I'm standing on or sitting on today is the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis peoples. I also acknowledge that Toronto is covered by Treaty 13, signed with the Mississaugas of the Credit, and the Williams Treaties, signed with multiple Mississaugas and Chippewa bands. If you wish to acknowledge where you are, you could put it on the chat box. If you're here with us on Zoom, we'll see it easily, or you could add it to the chats on the YouTube.
Mm-hmm.
Great. Thank you, Clyde. And as people are doing that, I'll bring up one of the regular first screens here with our presentation. It is, of course, the Creed. And I keep reminding folks that we're called to be the church through all of this. And you'll see me say it again, where none of us, whether we're church staff or treasurers or M&P committee chairs or general managers of church buildings, none of us signed up for quite what we're going through right now. So it's great to be with you and to not be alone as we work our way through this. Next slide, please. So you've seen the format, those of you who've been on before, but the latest news, of course, is that the CEWS, this Canadian, actually, I'm going to stick with the acronyms. The CEWS is the 75% program, is extended now through August 29th, which is basically another 12 weeks or another 3-4 week segments as we're learning to divide up our revenues and measure things. Much to my amazement, some changes were announced yesterday, retroactive to inception. So some stuff I told one fellow about people coming back off leave and so on Friday became out of date on Monday. And I'm sorry, I don't remember who you are, but just to say, I'll cover that in a little more detail later. A key piece of news that we've been waiting on and that Kendra's worked so hard on is the emergency rent assistance program. It is now been expanded. The objections have been dealt with. There's one technical element that we're waiting for formal, Kendra's being very careful about waiting for formal confirmation, but I'm very confident now that it's going to apply to us. There've been a lot of questions on how the short-term, the temporary wage subsidy plays with the 75% program. And of course, as we invited last week, we'll be dealing with a whole bunch of questions that you've already asked, and then ones that come up tonight on the various chat boxes. And I want to just recognize Kate and Aaron and those folks that are trying to keep track of everything. Clyde's doing the same thing. So thank you for that. Next slide. So latest news, as I mentioned, the rent program looks like we're eligible. The bank loan program, there were some announcements, if you've been following this yesterday, expanding the program. Did not expand it to deal with the technical objection that we have on for churches being eligible. But I want to say here, would not repay a loan yet if you got one. There is now a mechanism to potentially repay it, but I wouldn't be in any rush. We know that people are still working on this, and Kendra will tell you that she worked several weeks on this before the Canada rent stuff started to go our way. I'll just mention again, I've received a few complaints, and I don't blame anyone who's complaining about a 30% insurance premium increase with their June renewal. Just to say that the insurance market is horribly what's called a hard market, and we shopped this around and did all kinds of things to try to keep it down. My goodness, to 30%. You already know, but the T3010 filing is extended, and Susan Jackson has demanded that I again remind you that church statistics, we aren't anywhere near where we normally would be in terms of submission, and if you could attend to that, it would be very much appreciated, because it is a key input to all kinds of regular church business. So with that, next slide, please. So usually there's something we got wrong from the week prior, and I just want to be upfront about those. I completely blew it on things slowing down or stabilizing. There more announcements the last 3 or 4 days than there were the week prior. And I'm not even going to speculate on that anymore. Want to keep stressing, people are asking for a very firm direction on what to include or exclude in revenue. And the government, I've talked to senior officials on repeated occasions now, they have not documented this really thoroughly. They're basically using language like it'll be based on fact. They're using language around using your regular accounting methodology, whether that's cash or accrual, those kinds of things. And the big message here is just document your assumptions and be consistent with how you do this. If this particularly relates to claiming the 75% wage subsidy. And we'll be talking about this some more, but the 10% subsidy was announced well before the 75% program. So it doesn't fit. It's completely different. It works in a completely different way. And for simplicity, we're suggesting that the cleanest approach for you will be to just literally take 10% off when you're calculating your wage subsidy, as opposed to what amounts ADP might process for you, that kind of thing. Next slide, please. So just again, want to thank, I could thank any number of people here, but again, the payroll team, Angelica, Eileen, Olga, and Ravi have just been doing an incredible amount of work behind the scenes. You know, none of it, and the ADP team as well, none of it is as fast as we would like. We have questions, but there's just a tremendous amount on the go, and I want to recognize that. And of course, Clyde has been helping so many of you navigate how to get registered. And frankly, Kendra's name is going to be on this list in the coming weeks, because we're going to be talking a little bit about building reentry and perhaps having more detail still when the application process goes live for the rent program. So I just want to say again, there's so many people working hard behind the scenes. You know, Steve is there too, and as I mentioned, Aaron and Kate and various folks behind the scenes as well. Moving on. So I put this in every week. So if someone is just coming new, there'll be a bit of a checklist. I won't speak too long to this. The 40,000 loan program. If you got one, hang on to it. If you don't, wait. We know people are lobbying for the church to be available, and sometimes or for this to be available to the church. Right now, it is available to camps, and it might be available to outreach ministries because they're incorporated if they're reporting sale of goods and services on their T3010. And what you're reporting matters, okay? It matters for this, it will matter for the rent program. Frankly, it matters for, you know, what the government has on record is what is being used for all these programs. So that's the big loan program. Next slide. Okay, so here I'd like to maybe turn it over to Kendra. We've adopted these acronyms, but she's very kindly put what it stands for to start things off. And Kendra, over to you.
Sorry, sounds like my headset's not working. Is that better?
That's better.
Sounds clear now. Thank you.
Headset death. It worked an hour ago, but there you go. Thanks for being with us, everybody. So since the first idea of this commercial rent assistance, Trinity St. Paul's has been working with what's informally called the Hubs Working Group. So the Hubs Working Group is made up of people from all across Canada, led by Artscape here in Toronto. So for those of you who don't know, Artscape owns a number of properties here in Toronto that are hubs, often for artists, but all kinds of not-for-profits. So the Green Arts Barn is an Artscape venue. So we were working with the hubs from the beginning to try to figure out about commercial rent assistance and how it applied to hubs. So I wanted to say to Eric, first of all, I now have confirmation that the T3010 counts. So everything we have here today, we now know a good bit more about than yesterday. Hooray. So churches and other ministries are now eligible. So there had been a question about whether taxation documents, whether T3010s counted, and we had confirmation just about half an hour ago from CMHC that yes, the T3010 does count. So, so this disclaimer is gone. So next slide. So it's for providing small businesses with rent relief. So if you within your church have other small businesses, not-for-profit or commercial, doesn't matter, within your church who are renting from you. So they have a rental relationship with you. They're not there for free or for exchange of goods, which I know is sometimes a thing too. Then you have the ability to apply as their landlord for rent assistance for them in order to reduce the amount of rent that they have to pay, but ensure that you receive some rent. So I don't know about you guys, but Trinity St. Paul's has not been collecting rents from their people. So it will be good to be able to come up with a way to start to ethically collect some rents once again. So it reduces the rent that is owed by the impacted small business tenants and helps them to meet their operating expenses. But the property owners must offer a minimum of a 75% rent reduction for the months of April, May, and June. And I will say this is the one piece actually that I don't have confirmation on whether you can apply separately for April, May, or June in the way that you can for the wage subsidies, or whether or not it's a package deal on that. So I'm not clear on that. So that 75% rent reduction, though, gets broken down, and basically the government ends up paying 50% to you as the landlord. The tenant agrees to pay 25%, and then you agree to forgive 25%. So for me, that's a major gain on forgiving 100%. I'm just going to see, do any of the rent subsidies apply towards the rent we pay as a congregation for use of the original building portion after selling the property for housing? Only if you're paying that to another entity and they apply for the commercial rent. Like, you can't apply for the rent subsidy for a building that you own. Next slide.
And Kendra, just I'll throw in a question that jumped out at me from reading material.
Yeah.
And I always worry, but it talks about having a valid lease or rental agreement. So if I'm a music teacher with a one-page rental agreement, does that count, or is it more for lease arrangements?
I think so, because they changed the language, Eric, between this last iteration and this one, from valid lease to valid lease or rent agreement. So I think that reflects some of the advocacy that we had done on that. So I think as long as paper exists between you and the group, then yes. Yeah.
Perfect.
Another related question, Kendra. Some of our congregations would have rental arrangements with another congregation, with a Pentecostal congregation or something that comes in on Sunday afternoon to use their space. They wouldn't be a business. They're a congregation. Is it possible to get the same program if the renter?
Trinity's involved relationship with Bathurst United Church. Mm-hmm. And yes, Bathurst United Church will be able to apply for rent relief for Bathurst United Church because they are a not-for-profit. And so this word commercial rent assistance is not intended to indicate for profit. It's intended to indicate the differential between residential and commercial.
Got it.
And so CMHC has been very clear that not-for-profits and charities are eligible on both sides, both as the landlord applying and mm-hmm. as the small business receiving the subsidy. So,
thank you.
Yeah. Next up. So the landlord's eligibility, as I said, the word commercial is just intended to differentiate from residential. There doesn't seem to be any concern about being a not-for-profit or a charity, and we received double confirmation of that today. You must have a legal rent or lease agreement. When I wrote this, that was the language at that point, but then they wrote rental agreement, which I think, again, downgrades that to a piece of paper that indicates what your relationship is and who's paying what. You must have declared rental income on their 2018 and 2019 tax returns. So when I wrote this, I was clarifying the validity of the T3010, and we just heard half an hour ago that the T3010 is valid as a declaration of rental income. It does call into question for me, Eric, back at the beginning there when you said that people's T3010s deadlines were extended. That's a deadline for 2019, right? So we probably want to finish those in order to have the 2019 mark point.
Yeah, I guess my only comment would be that no one's going to process them at the CRA. Yeah, right now. So yeah. I think as a practical matter, there'll be frankly, anybody who was renting in 2019 probably was in 2018 as well. Yeah. Most of our congregations report some rental, or many report some rental income. So we should be okay. If your 2018 return is zero, then I would follow Kendra's advice and try to file your T3010. And frankly, I think the way this is going to work is they'll be checking this after the fact anyway.
Exactly. And the CMHC website actually does say that if your rent is recent and you don't have a provision of indicating this on income tax, that on your tax forms, that they have different ways of you proving it. They just haven't clarified what those different ways are yet. So you would probably have to ask more questions on that. So it's no longer a requirement to have a mortgage. At the beginning of this was the major thing we were fighting. The government said that you had to have a mortgage, and Artscape and Ontario Nonprofit Network and Imagine Canada went to bat on behalf of all of us to say that many of us don't have mortgages, and that in fact is a great thing in the not-for-profit sector, and is a signal of strength, not a reason to be penalizing us. So they were extremely helpful and reacted very quickly. So good on them. Next page. Yeah, so then the tenant eligibility. So here's the interesting thing. You as the landlord are responsible for holding the documentation of your tenant eligibility. So it's kind of up to you to decide what that mark point is going to be and how intense you want to be. So tenants must prove they have 70% reduction in income compared to last year or compared to January, February 2020. Did my internet just go out there? Are we okay? There we go.
Yeah, we're good.
Everybody can hear me again? Okay, good.
Yeah.
Sorry, too many people in this house on the internet. Tenants must prove a 70% reduction in their income compared to last year or to January or February of 2020. So when I wrote this, they had to prove that 70% reduction in income or have ceased operations. That changed today. So strike that or have ceased operations. The only mark point now is that you have to be able to prove a 70% reduction in income. So their tenant's regular rent must be less than 50K per month. I imagine that'd be the case for most people who are renting from churches. And tenants themselves must earn less than 20 million per annum. Again, not, I would think, a hard mark point to hit.
Right.
So,
I'll just mention, and there's the same thing as we have on the other programs, there's attestations.
Yeah.
So both the tenant and the landlord, that typically being us, will have to sign an attestation about how we qualify.
Yep, and the CMHC actually put up all kinds of documents, sample documents available online today that you can download in order to do that. So Trinity St. Paul's, that's exactly what we'll be asking for, is a statement, a signed statement from each of our user groups stating that they had a 70% reduction, and then we'll be asking them how they will be tracking that should we get to audit, so that we know what their tracking methodologies are. I see in the question box, Jeffrey here has asked, we've given 100% reduction to our tenant, and as the tenant is not paying 25%, can we still claim for the 50% assistance? Yes, of course. And that's Trinity St. Paul's situation as well. It's just that you have to be paying, the tenant has to be paying no more than 25%. Obviously 0% is a better standard than that. Next up. Right, so we were awaiting the confirmation of the T3010. We got that today. You're not going to see that anywhere on their website. I don't know when it will come up, but it came from Artscape, from CMHC, and I have an email contesting what was the word I was looking for there? Attesting to that. There we go, attesting. So landlords to gather the following proofs. So you need to prove the tenant reduction in revenue. Again, on the CMHC website, there's all kinds of forms now that you can just fill out that you can download and use. You need to prove that you have leases or rental agreements. The reduction or the removal of rent letter with the guarantee of no evictions needs to be signed by both parties. So there is a copy of that as well on CMHC's website that you can download. The application will be available on May the 25th, and you need to make application by August the 31st, and you can sign up for updates at this link. On the next page today, more detail came down on May 25th and what that actually looks like. So if you want to go to the next page. It's not so clear, but basically, just like they did with the CERB, they've divided it up by regions so that they can manage the volume of applications. So on Monday, property owners who are located in Atlantic Canada, BC, Alberta, and Quebec who have up to 10 tenants are eligible for the program, so they can apply on Monday. Tuesday is Manitoba, Saskatchewan, Ontario, and the territories with up to 10 tenants. Wednesday is all others, property owners in Manitoba, Saskatchewan, Ontario, and the territories. Thursday is all other property owners in Atlantic Canada, BC, Alberta, and Quebec. And then Friday, it's widely open.
And Kendra, one of the challenges for us as treasurers and as ADP payroll administrators and stuff has been the CRA registrations, right? Whether we've had a My Account and stuff. Nobody has a CMHC account right now. So this one's got to be more user-friendly. Like I can't imagine, unless they're requiring a link to one of these other account programs, I think you're going to be signing on as a property owner, with some property information. And I don't think we're going to get, I'm hoping we won't get as caught up in the bureaucracy of registration. Is that fair?
Yeah, I think you're right, Eric. I had a very fast look at it before this meeting because it had changed again, and it was referring to property roll numbers and addresses and business numbers. But I'll have a look and check that out, actually, what the portal is. And if the portal's problematic, we'll just go back to CMHC and we'll come up with a new plan.
Yeah. But this
Just
does
before we go
suggest
on
to
to
me
the
that we might
next
have
slide,
more
Kendra,
call. Oops.
Oh. Sorry, are we okay?
Go ahead, Eric. Yep.
Well, no, I think someone was going to say something.
If you're finished, I've got a question on the chat. I just wanted to pose to Kendra. Are you not hearing me? Okay.
No, I
the
hear you.
question
No,
from
you're good. There was a
Tina
bit of a
Cote
static.
is good, thank you. Yeah, I don't know what's going on. Sorry about that. Congregation became a tenant at the beginning of January. Is that going to affect their eligibility for this?
Yeah, that's tricky because it's pretty close to when this is closed. I would still apply. I mean, it's still before March. I think if you're saying that your tenant came in March, that's tighter. But I think January you should still try.
Okay.
The way I read the material was
Eric.
that January and February were an option.
No, so you can't have them, you can't apply for the rent subsidy for January, but the tenant who came in January, as I understood the question being asked is, can you apply for the rent subsidy for them for April, May, and June? And I have no reason to believe that you couldn't.
And the assumption here is the tenant is continuing to use the premises or has access to it. What if they're a daycare that's not permitted to be open?
There is actually no assumption that the tenants are continuing to use the premise. None of Trinity St. Paul's tenants are using the premise.
Right.
In fact, it's probably not legal for most of people to be using the premise because of the 5-person limit. So no, I think the premise is that people aren't using it.
Okay.
And more broadly, it doesn't matter. Again, you qualify whether the building's boarded up for the moment or whether there are still some skeleton activities in it.
Yeah, it's meant to address.
Yeah, the issue is that you have an agreement.
Revenue for the small business, not anything else, really.
Yeah. Okay.
Great.
Thank you.
And then we had another question here. I see we took over the management of the building in January 2019 and started to get rental income then. Can we apply for the subsidy? That's pretty tricky because you won't have any evidence of that rental income before. I don't know that I have an answer for that one if you have no evidence of rental income before.
Yeah, it's Eric. That's one where you would want to file your T3010 perhaps.
Yeah. I think that's my last slide, but let's look.
Okay.
Nope, not my last slide. So the tenant pays 25% as indicated, but they could, in fact, yes, pay less than that if that's the agreement you came to. They just can't pay more than that. Provincial government pays 50% retroactively for April, May, and June. the landlord accepts that 25% loss as we talked about. So I've given you an example here. Tenant one pays $1,000 a month usually. With the CRA, they now pay $250. The government pays $500 directly to you as the landlord, and you as the landlord forgive $250. And this would apply for all 3 months. And if the month has passed for which this applies, you can, so for instance, let's say that you asked all your tenants to pay 100% of their rent in April, but now you have this possibility. You can either refund some of that rent to them, or you can apply it to the future. But it has to be very clearly stated. There has to be a clear agreement about how you're going to lay this out.
Just a point for clarification here, is the provincial government, and that this is a federal program?
That's right. That's why it took so long, because the provinces had agreed.
Okay.
Yeah. The money's probably coming from the feds, but it's being delivered provincially.
So a couple of questions here on YouTube. First of all, some confusion about the acronym. You're not talking about the loan to the church, you're talking about a grant to the church, a rent assistance program. Is that correct?
Sorry, say that to me differently.
So the question from YouTube,
I understand the question.
is a loan to the church. Is that correct?
No, it's a forgivable loan, which in everybody else's language is a grant. So it's a loan until you prove that you didn't evict anybody and you didn't ask anyone for rent later on. So basically they're saying it's a loan until this thing ends. And then unless they've had any complaints against you, it becomes a grant. So a forgivable loan.
And sure, sorry, I suddenly jumped. There's several questions here. Will this affect the revenue attestations we have to make for the 75% wage subsidy?
I'll field that one. No. They've been clear about the various government programs not being counted in terms of eligibility for something else.
So this would not be considering, because this is a government loan grant. That makes sense.
Yeah.
Okay.
Yeah, and you know what? Having said that, I could have a niggling little worry that that the CMHC is not the government, but I would offer this with about 95% certainty.
It's pretty clear on the website that these are two separate programs intended to support you in two separate ways.
Thank you. So the next question, if we have a paper agreement to rent, a lease or something, tenants have not been coming in, then the tenants have to have reduced income by 70% so that the landlord can apply.
That's
Is
correct.
that correct?
Yes, exactly. Precisely.
Okay. And the months again that this applies for?
April, May, and June.
What about sports groups, basketball groups, once a week tenants?
No, does not apply for them.
Okay.
Now, Kendra, unless they have a written rental agreement, or
The intent is long-term, like exclusive use. Not exclusive use isn't quite accurate because daycares aren't always exclusive use, but that they have long-term monthly rents. We're not looking at individual user groups.
or more correctly, the revenue drop too. A basketball group typically, I wouldn't think would have a revenue drop, but perhaps not. Okay.
Are there restrictions as to how you can use the funds? Mortgage, maintenance, repair, utilities, insurance, something like that. Do we have to prove that we've used it for a specific purpose?
Sort of. You'll see that language on CMHC, but what they're intending is to stop us from profiteering. So it can be used for anything but profit. And if I know church buildings, you're never going to get to profit. You got lots of things you can maintain. So it's always going to be upkeep and maintenance, right? So
what if
basically they're trying to stop commercial rent people from profiting.
Thank you. Next question, what if your tenant can't pay a dime? Are they required to pay the 25%? I think you answered that, but reiterate it for the person that has asked the question, please.
No, they are not required to pay anything. It just has to be less than 25%. There are questions too, if on the CMHC website, you'll see people have asked questions about what if they don't pay their 25%, what can I do about that? If you have insisted that they pay the 25% and that was the agreement, and you go into this subsidy agreement and they don't pay the 25%, You cannot do anything about that for April, May, and June, or however long the government extends the no evictions notice. But you can take action after that to collect in arrears rents.
Thank you. That's all the questions I've got right now.
Okay, in that case, we're probably changing gears.
Oh, yeah, there we are.
So again, just a recap of the various programs, which I'm not going to speak to them here at all, other than to say, here's a one-page summary of the CERB, as the Prime Minister calls it, the 500 a week for 16 weeks. We have no idea if that program will be extended, and for many part-time and contract workers, this could actually have been advantageous in the short term. So we're just moving, that's there for a placeholder in the slides, but we'll move right on to the next one. And again, this is not something we're going to talk about tonight, but we just want to stress that if there are layoffs, if you've been involved with that, then you need to get folks a record of employment. The fastest way to do that is online at Service Canada, and Clyde's done some work on that. And whatever else, do check with your region, because there are different provincial rules and guidelines around that. Next slide. So we keep harping on, maybe that's the wrong word, but the challenge and the opportunity of using these online government services. So there's multiple ways to do it. We've talked about it at length. One thing I wanted to flag here, Clyde has been providing this advice, and both of us were a little shocked at the frequency with which people have been misfiling, frankly, their trustee lists. So if you put someone down as serving from January 1 to December 31, when you file your T30, you file your return, that basically means you have no active trustee names. And that's why some of you are bumping in to the challenge with the CRA. And it's one of our church administrators did a random check on 10 churches and found 3 that had this. So look yourself up on your own charities listing. Look yourself up. Check your trustee's name listing. It's there under the detail of the T3010 filing, and make sure that you've got that's a place where you can provide the names they have on file. So it's really just crazy. We did not anticipate that, and having said that, my own church did that a couple of years ago, and it took me a year and a half to dig out of it. And I never imagined anyone else would do it. So if you did, you're not alone, as usual. Next slide, please. So this is a quote from Clyde in an email earlier, basically speaking to the issue I just described. So he's offering a way to start to try to work your way around it if you've dug yourself into this hole where, according to the CRA, you have no trustees. I'm not going to read it aloud there. It'll be available on the slides. But the bottom line is the best way to do this is to submit a correction to the CRA right away. That's what Clyde is saying in this paragraph. And again, the slides will be available to you as well. Next slide, please. So again, just in terms of existing programs, I want to thank the United Church Foundation again, a historic one-time grant recognizing the challenge of all of this. We've got an online loan program. It's $10,000. It's intended to kick in after some of these government programs, but some of you are using it already, and that's fine too. The next slide has a few details about it. But again, this is an online form. If as soon as you complete it online, it goes to your region contact. It gets a relatively quick review there. We're not requiring signatures. And if anything, the one request I'll make to you here is we will want your bank information as part of this process. We will come back to you and ask for it if we don't have it with the application. We can do that by phone, or you could fax it to us. But the whole idea is to get you a check just as quickly as the government is pumping out checks right now. So we're waiving some of the usual paperwork, lots of stuff to figure out later on. Next slide. Okay, and again, interest-free for a period of time. These are the starting stakes. Could change again in a few months. I would say that these particular facts, how long it's interest-free and the forgiven amount and so on, those terms will hold it till at least September or October, and we'll see where we're at. Those dates could extend, but in any case, that's how the church program will work. And we expect to have a fair bit level of activity there. Next slide. Okay, so this webinar and the last week's are relatively solid in terms of the information provided. And I was speculating last week about the rate of change slowing down. I no longer do that. Next slide. So I just want to stress with a lot of the questions that we've had and you've asked for a clarification tonight is around the interplay between the two programs. So I want to stress with the 10% program, we take it, okay? The government announced it first. It doesn't play nice and clean with the 75% program. The dates are slightly different. The way it works is different. In the 10% case, we are literally just reaching into the income tax bucket and taking the maximum allowable, and it was intended as a quick hit, and we're doing that. Now we're applying for the 75% and saying, oh, well, hold on a second. What about how do we deal with the 10%? So that's what we're going to talk about with the next few slides. So again, all church payroll entities, this is based on who has an RP number and is taking source deductions and is filing payroll paperwork with the government. The large majority of you folks are using the service now with the General Counsel Office and ADP. Payroll, lots of payments arriving, most have arrived. We do have some exception lists and error lists that the payroll folks are double checking, but all that's happening. And if you're doing it yourself, either by choice or because you have a bunch of stuff off of ADP, then we have the forms and the calculator spreadsheet there for you as well. Next slide. So that's the web link where you can find those forms. The first batch was just under 1,100 pastoral charges, and they're listed at report change of contact. There's a list, it's sorted by postal code, which just happened. We had to be careful about confidential information, so that's what we used for you to find your list. We had the sign up program last week, and we'll have a second list for that. And we're working, basically to get everybody their 10% rebates. The key thing is this program is available all year. And the only reason you could wait till the end of the year to even do anything with this. The reason we're all fussed over it right now is not just the incremental cash, but the fact that we need to report something for the 75% claim. So if you aren't eligible for 75% at the moment, keep retesting because the government has extended the program through August now, okay? But in the meantime, the 10% will shake out and will take some number of months depending on how much income tax bucket there is. Next slide. And for anyone that's new, I apologize if I'm going too quickly through this. If you're a regular on this broadcast, you're probably thankful. But in any case, This is a legitimate salary amount and possible income tax withholding amount that would apply for a single individual. Lots of our employers have one individual. It would take 3 months because you're entitled to take up to $1,375 over this 3-month period, but you also are limited by the 10% of payroll rule. So you can only basically process this you're going to have to process it 3 different times to maximize your entitlement, and that is what ADP is doing for you. And those of you who are trying to back into ADP's calculations, I ask for patience. We're trying to dig out of a big backlog, which we've now done. We're trying to do the existing ones. And this is all a special service that frankly ADP has not made available to other clients. So there's lots of little glitches and miscommunications to figure out as well. Next slide.
Eric has a question from YouTube. So ADP processed it for April, but they haven't done it for March. Do people have to go back and do it themselves for March, or is ADP going to catch up? How does it work with that? Because the first ADP payment only
absolutely. Yeah, the short answer is going to be you have to trust the system. By all means, flag it if there's something. If you see something that concerns you, you can send along a question or email. But there's a digging out process that happens, and there's also a possibility of a misunderstanding because they don't do it for the entire month of March. Remember, it's only for payrolls that were run after March 18th. Excuse me. So next slide, please.
Before you go, we've got dueling accountants going on. The ADP calculation of the 10% subsidy was different than our calculation, says Chris. CRA said our calculation was correct, ADP was wrong.
Not a debate I want to have this second. ADP has to do this for a lot of people. And, we can look at the specific circumstance. The United Church has certain unique elements, certainly with regard to the allowances and MANT situations and so on. But no one can talk about it being right for sure, because there is not a prescribed by the government what's included or not. The language that Clyde is teaching me to use is eligible remuneration.
And when do we get documentation from ADP on what they did and how?
It will be at the end of the process, because they're at different places with different people, depending on if they signed up, when they signed up, when their payrolls are. There's other factors too, like whether they're a monthly or quarterly remitter, which is something many of us wouldn't even know. But it's based on payroll size and that kind of thing. So there's a whole bunch of variables, and so that they're not able to provide a report in the middle, but they will basically report back at the end for all the transactions related to these programs, and specifically the 10% program.
And somebody's thinking that an error has been made, perhaps, and it would be in their favor. Is this all going to get worked out in the wash? What about errors?
Again, if you're really concerned, you could send an email to payroll at United Church, united-church.ca. But my advice, I know this is tough for folks because this is one of the things that you're watching for money come in, is you're going to have to trust the system for a time. There's a whole bunch of checks and balances, but all of this was cobbled together on the fly as an attempt to help. And the rules are pretty clear. You can't have more than 1,375 per person, and it's a 3-month program right now. Period. I
think the anxiety I'm hearing is not that they got too little, but that they got more than they expected, Eric. They're afraid they're going to get hit with a surprise later.
Fair enough. They might want to send an email to payroll at United Church. But again, right now, I would say that if the money is flowing, it's only when you get to the maximum. If you were to exceed the maximum is where I would start to care.
Thank you.
It's a tough answer. My answer later on in the slides is you're going to have to trust the system, and that's not our natural reflex.
We're not used to doing that either as citizens or as Christians, Eric.
Certainly not as church administrators either. Okay, so again, there's the whole business around what the cap is. The nice part of this program is that the 10%, if you happen to have a lot of part-time employees, if you're taking source deductions, they're all eligible, subject to the two caps. There's a 1,375 per employee maximum in total, but your employees can work 5 hours a week if you're taking source deductions, or they can work 40. So there is, this is how one would calculate the maximum benefit. And it's Mark Cuddy that caught me on this one last week or the week before. So thanks to Mark again. Next slide. I want to get to the interplay because that's the most important part, I think, for us right now. So if you authorized ADP, fine, it's going to happen. If you haven't authorized ADP, you have to see what kind of tax bucket you have to play with. You have to take it yourself. And again, if 10% is all that you get from this particular, you're not eligible for the 75, then by all means, you're obviously wanting to see how quickly you're going to max out your program eligibility. But if you are eligible for the 75, we're strongly recommending that you use 10%, use the 10% as an estimate in your first claim. And I'll speak to that again in just a bit more detail. Next slide, please. So we're just entering now a question period. So if you haven't typed in questions, folks, please do. But these are the most common questions that we've had over the last few weeks. And number one, of course, is always, where's my money? My money in this case being the rebate. For the 1,090 folks that signed up in the first go, over 1,000 payments were made. Quite a number of them were for multiple payrolls. We can check to see if one was missed. There was an exception list. Okay, there were over 100 cases out of the 1,700 payments where basically the computer kicked it out and said there's some kind of problem here, and the payroll team is working that list. So far, I've chosen not to put that list on the internet, hoping that we could sort it out fast enough. But if that proves not to be the case, then we will either email each person, each unit affected, or we'll put the list up or something. But right now, just to know that we're doing a whole bunch of stuff at once. It's a manual process, and so the next question is, what does the amount represent? And this is one where someone was saying it was overcalculated. Someone today told me that it was out $13 on several hundred. And right now I'm saying trust the system. ADP is using an automated approach. It's not, there's no question. Right now we're trying to get the most of it done and recognize that we're working towards the caps, whether the cap is 10% of 3 months worth of salary, eligible remuneration, or whether the cap is 1,375 per person. And we get that by reaching into the payroll bucket for every payroll that's available to us from the 18th of March to whatever, I think it's June 6th or some date like that. Another question we get is, will we get a statement from ADP summarizing this? And the answer is yes. At the end of the program, you should get a thing that said, this is how you maximized your credit. And that will be a sum of all the payments credited to your account. It will not show up on your regular ADP statements. It goes straight to your bank account. And their expectation is that they will be needing to provide to their various clients a summary of this, and potentially to the government. They're all still figuring it out, folks. That's just the way it is. So what amount should I use for the 75%? And for the first claim, I'm saying you should use 10% of your eligible remuneration, Clyde is setting me straight on this, that you're, in other words, if you come up with your gross wage number, your eligible remuneration for the 75% claim using their spreadsheet, then take 10% off. Because remember, they're saying that if you're eligible for the 10% program, and that means you're a nonprofit, you're a charity, you're a small business. Lots of folks aren't. All the big companies aren't eligible for this. This program caps out at 25,000. Okay, so at the, at the national office, we capped out right away. The very first time we processed it, we would cap out just based on the maximum because we were a charity. So what I'm saying here is use that 10% number, because even if you haven't gotten it yet, you will. And then you have to track your claim, because you will have to realize that it caps out. Another question I've gotten it several times today is, will the 10% program be extended too? And I'm going to say, I make educated guesses, and sometimes I'm wrong, and you've seen me wrong on this weekly series, but I'm going to say probably not. In fact, I'm almost certainly not. The 10% program was a quick hitter. It was targeted towards small business, and the 75% supersedes it. And the 75% is available to the biggest companies in the world, as well as our small charities and all these other things. So I would say the odds of it being extended are almost zero, but for now, here we say probably not.
Does that mean when we're applying for July and August, would we use a different calculator? Will they give us a different spreadsheet? How will we be applying for those extended periods for the 75% error?
It will depend. I mean, technically, there won't be a 10% amount that's even there to be subtracted. Even though you're still collecting it, the amount of the 10% adjustment would have applied to the first 3 months. And that's why it doesn't matter what ADP sends you, okay, which is based on your payroll profile. That's why we're saying take 10% and then track how much is left for you to claim. If you do that for March, and see what's left for April and May. I know that sounds a bit convoluted, but it's because the programs were never meant to coexist. Next slide. So now we get more generic. I've tried to answer the highest volume questions, and I've got better question answers than me waiting for your questions here if there's some more to do. And we will get on now after this to the 75% program.
Thank you. So I've got a couple of questions about the Emergency Commercial Rent Assistance Program. And one of them has to do, and I think you answered it earlier, but somebody's asking again, so it wasn't clear, I guess. If we get the 50% for our daycare that comes in, and so we suddenly get this emergency rent assistance, and it pushes our May rent up above the 30% threshold, does that mean we're no longer eligible for the wage subsidy?
It is not. I'll field this one, Kendra. It is not rent. Okay, it is a government grant, and like all the other government grants, it doesn't count. Thank you.
And just clarification again, it came from YouTube. I know Kendra answered it on the Zoom chat, but the YouTube people can't see that.
Oh.
So AA groups, yoga classes, fitness groups, even if they have a lease with us, those aren't the kind of tenants that the emergency rent assistance program is designed for?
No, it's designed for tenants. The way you're asking that now has me double checking that in my head, because if they had, like, a lease is not the same as a space user agreement. There's an implication that they're there at 30 days of the month, right? So that is what we've understood this program to be for, is people who are there, business days.
Let me push back a little bit. I mean,
yeah,
the largest tenant in my congregation is a daycare, and they have exclusive use space. The next largest tenant is a Pentecostal congregation who has specific hours. They use the space on Sundays and they use it on 3 evenings a week, certain rooms, and the first Saturday of every month. And I mean, it's all very clearly worked out in a 7-page lease, but it isn't exclusive use and it isn't all the time.
I think that it would get extraordinarily ugly if we were trying to figure out all of those casual users. The language around it has been about tenants. So
Okay.
I could be proven wrong, and I'm happy to go digging more. But certainly the advocacy efforts that we've put forward have not been for those small user groups. It has been for tenancies. And so a lot of what got changed was in relation to the advocacy. So, I mean, I too, just to clarify, we have 400 user groups who aren't eligible for this. So it would be lovely if they were, but I don't think they are.
Yeah, and if I could, the other test of this, before we even get all caught up in it, is whether any of these groups have had a 70% revenue drop. Because a number of them wouldn't generate revenue other than, I suppose, maybe collecting amounts to pay the rent or to pay the rental amount.
Oh, sure.
So we can look into this, but this gets into the question of what is a formal, rental agreement, and certainly I've always understood this to apply most consistently to folks who actually have something called a lease, because that's where it started, and now it's been expanded a little bit to rental agreement just in the last 24 hours. So we're still figuring it out.
Yeah, I'll do some more research, but I certainly have not interpreted it that way.
Right, and you've got the most tenants of anybody impacted by this.
Oh, heaven help me! All 400 of them are eligible. I'll never figure it out, Eric.
Okay, not seeing a lot of new questions coming in, so folks, now's the time, and by all means, pass them along. One from YouTube here: if they weren't eligible for the 75% subsidy in the first period, but they are for the second and third, what about that 10%? Can they still claim the 10% for the first period, even though they couldn't claim the 75%?
Yes, you get the 10% anyway, and either you're claiming it or ADP is processing it for you. Remembering that it applies to payrolls from March 18th on. The 10% applies, period. And then the 75% has the 10% we take, the 75% we have to qualify for and then apply for.
Okay, thank you. Sherry is confused about the connection between the 10% subsidy and the income tax figure deducted. I know you've tried to say this several times in different ways. Can you just run through that one more time?
The maximum amount that ADP or anyone can process, the money that's available to quote unquote legitimately take as part of your entitlement to the 10% wage subsidy, is whatever's in the income tax bucket. The CPP contributions and the EI contributions have to remain intact. It's possible, though, for you to remit zero income tax because you're claiming it back as a grant under the 10% wage subsidy. So that's why in the example I had earlier, it takes 3 months because you can only claim 10% of your payroll. And yet if you have one employee, the maximum entitlement will take you 3 months to claim. If you have a whole bunch of smaller like part-time arrangements, it could take you 6 months to claim. That helps, Sherry. And if not, if not, please send along an email and I'll try to deal with the specific concern.
Well, and the way I'm understanding it, Eric, is that ADP sends it back to the church instead of sending it on to the government. So they're not going to send you back more than you gave them, more than you would have, that they would have otherwise sent to the government.
Yeah, no, that's a good way to say it. And in fact, that's why there's a lag, because they actually record it as income tax and then they record whatever amount they're giving back to you, the customer.
Okay.
I'd like to jump in on a question that was way back up at the beginning, where they were asking about the ADP form to calculate the 10% that we're using, monthly salary or weekly salary. And it's not. The 10% is based on what's been paid out on payroll. It's not based on the weekly or monthly, quarterly. It's what has been paid.
For the whole year?
For the 10%. No, for that month.
For that
Or
month,
that
okay.
period. Yeah.
And specifically, it's the payrolls run between those dates. I mean,
That's right.
again, folks need to understand that if they're looking for an overall logic for this to hang together, they're not going to find it. One program launched early, and it's been superseded, and it is what it is.
Okay. And eligible remuneration, which is one of those lovely accounting words that the rest of the world doesn't understand. What do you mean by that?
Gross salary.
And gross salary or compensation or remuneration includes taxable benefits. So if you're taking your continuing learning allowance as cash as opposed to a reimbursement of expense, then it would be included. That tiny little taxable life insurance example that I used last week would be included. And the one thing that wouldn't be included that's on a tax form is your MANTs. Like it is those relatively few MANT situations that we still have across the country, because you didn't get cash for that, even though it shows up on your income tax forms at year end.
And the last question I've got on my list before we go on is, what's the right way to put in trustees? What are the right dates to use? If it's not the first of the year to the end of the year, what are you supposed to do, Clyde?
Start date of a trustee is the day they are first elected.
Okay.
The end date for that trustee is the day they are no longer a trustee.
Yeah, I was going to say,
What if we're in a church where people are elected for life or until they resign?
Basically, that's what this is.
Yeah.
And
you
I
put an
noticed
end date
someone
on
put
it.
up. Sorry, didn't catch that.
So maybe you shouldn't put an end date in at all. Will a form accept it with no end date at all?
Yes, there's no end date needed unless the person resigned or terminated their office during the year that form is for.
Perfect.
Basically, don't ever do end date except when it's a complete done deal. So the way I do it is I list everybody. Well, I should do it. Clyde does it now for me, but nonetheless, you list folks until they actually ended. So if you had an AGM this year, which would make you rather remarkable, or a Zoom one, I guess, and appointed new folks, then for this coming year's T3010 is when you report an end date. But always err on the side of not ending, because it is biting people right now.
Thank you. I don't have any more questions on my list here, so I think we could probably carry on, folks.
Yep. No, keep moving. As I say, we'll be talking about
clear tonight. That's the problem.
Now I've lost slides here.
Sorry, I've got federal 75% and all of the eligibility calculating revenues. And so are you not seeing this?
I'm not. I'm just seeing just your pictures at the moment.
We're wondering if we're having some internet issues here, friends.
Yeah. Well, I can sort of fake this if you tell me what's on the slide. On the 75%, I've got a few slides there recapping the program again. Yeah. The main
that's
thing.
what I'm seeing.
Yeah.
Eligibility, calculating revenues, all of those headings in red is what I'm seeing on this slide.
Okay. No, are other folks seeing it? I can fake it if
I'll start it again. Yeah, so I'll stop the share and then I'll start it again. See if that's working for you now.
Yeah, I got it. And as long as everybody else does it, it's more important than me. Okay, so again, this is literally a screen print from the actual, the online material is really good and has been updated literally every day now. So we'll just keep moving. We've gone through this in a fair bit of detail in previous ones. The key points being it's processed at the RP number, the payroll number level. So if you have a couple of payroll numbers, you have to go through this sequence, the calculator, separate spreadsheet, separate application for each RP number. And that includes RP 0001 and 0002, for example, which is what many of you have. If you have these oddball situations, as we do, where you have an RP number that doesn't match your charitable number or so on, the first test is to see if you actually have anyone on record with the CRA for the payroll number, and if not, you're going to have to try to get registered. Now, Clyde's been providing a lot of direct advice, and he's done some webinars on that. But we're also looking to add have a couple of people who have been voluntold, I guess, to help out, from my team. So we'll be making that available next week. Okay, if you have different folks on ADP and not, it's actually a little easier for this, because as long as you're filing them in some fashion with the CRA, it's just a number, however many RP numbers you have. If you've been filing some directly and with the same RP number as ADP is using, it's actually easier to do this than it is the 10% business. Next slide, please. Okay, again, the calculations, the main one, I think most folks have at least taken a few cracks at the calculator and so on. The main thing is you have to convert everything to weekly. Most of us are monthly or semi-monthly. There's all kinds of arrangements out there, but you're completing it for weekly, and therefore when you're taking in the 10% thing, you might as well convert that to weekly as well. So we've gone through the online calculator. It really is pretty user-friendly. We'll move to the next slide. And this is the actual calculator itself, and we've put in a few names, and again, trying to show the impact of say, one larger salary and a couple of part-time salaries. For this example, I gave myself the larger one. But again, you're filling in 4 weeks of compensation, whatever the numbers are. In this case, there's only $100 a week. That means you're not getting a huge wage subsidy, but remember, each of those people is eligible for the full per person 10% business. So these are the same numbers we were using on the earlier example. Next slide, please. So here's something that was new yesterday, and it's retroactive. So to the extent that you have seasonal employees, to the extent that you have people who were not on payroll in January and February of this year, those were all situations that were limiting the
I've lost Eric. Are there people hearing him?
No, he's gone. Sound's gone completely from him.
Yeah, I've lost him too.
Do you want to pick that one up, Clyde? Do you want to talk about? There was a question about somebody on parental leave last week, so this is apropos.
Yeah, to be honest, I saw this slide only about 10 to 6 tonight, so I don't know too much about this particular one.
Essentially, what it's saying is that they'll be eligible still for the wage subsidy, even though they wouldn't have worked in that 4-week period before, by the looks of things.
Yes, and you take the pay as though it was a weekly basis based from March 1st to May 30th, just to give you some calculation basis.
Yeah.
Okay, good, thank you. Eric is there, he's coming back again. Welcome back, Eric, glad to have you here.
Yeah, sorry, I must have crapped out there. I apologize. Anyway, bottom line, we've got these odd workarounds. There's a chance to either use January to March 2019, same kind of logic as before, or this March to May, I think it is. I can't see it quite on my screen. So this is stuff that deals with just the most unusual situations where you had some people who weren't paid earlier this year, and that was limiting your claim. It's intended to deal with seasonal employees, but it also deals with situations coming off leave. I can't remember who I was talking to last Thursday or Friday on this, but there's a couple of people across the country that had this specific problem, and the Prime Minister spoke to it. Who would have guessed?
Well, there was a question in last week's webinar, Eric, about somebody coming off parental leave.
Right.
So this would cover that eventuality.
Any of those things where there's an unpaid situation that was limiting your claim, and yet it was normal course type stuff.
Thank you.
Yes. So next slide, please. So this is new and retroactive. So again, imagine something being retroactive where all of us have already been doing this stuff. Okay. The best you can do if you're impacted here is try to figure out what your claim would have been and probably process it as an adjustment in a subsequent claim. And if you're not eligible for a subsequent claim, then there's going to be some reconciliation process at year end. So again, this is from Clyde's work a couple of weeks ago when we took you through this in detail. The whole notion of using the spreadsheet that's on the CRA website, it's very easy, friendly. One thing that a number of us have gotten wrong, not me, but I'm using us in the polite sense of the word, is this business around claiming 100% refund of EI and CPP. For almost all of us, this would be zero. If you've furloughed employees where you've literally said you are not doing any work, but we're continuing to pay you, that's a situation where you can claim the amount. But you've got to be really careful there. Most of us have not used language like that of furloughing employment. It's usually related, frankly, to union arrangements and contractual arrangements of that sort. So that is something that I wanted to flag. A number of us have gotten that wrong in our first filings. And if you did, just adjust it next time, document your findings. And things are moving so fast and changing underneath our feet. Okay. I mean, look at the stuff Kendra reported on today. It changed in the last hour before this meeting started, right? Or new information arose. So let's not get twisted and knots about it. Next slide. And I'm the one whose job it is to be all concerned about things being meticulous. So I'm trying to find the right balance here. So this is a statement I pulled out of another document today. The whole idea is for the 10%, it's the easiest way is to just take 10% off the top. If you haven't claimed it, which is a common example, all they're saying is subtract it now and get around to claiming it later. That's the whole logic using the 10%.
So how much later can you claim it? That was a question that came up earlier from YouTube. We haven't claimed it yet. How long do we have?
For 10%, you could do nothing all year and claim it as an adjustment on your tax at year end, like in your payroll summary. It's that wide open. Now, most people and most of us need and want the cash.
No. Why would you wait? But yeah, I get it.
Yeah. So for the 10% program, you've got literally all year, and you could claim it literally as a year-end adjustment. For the 75% program, the deadline was October before they extended it to August. Now, I haven't checked to see if there's a new deadline, but there's all kinds of new information coming out on that. Next slide, please. So this is, again, a printout from the online calculator. The remuneration here was the 4,800, which was the 4 weeks worth of, it was 1,000 a week, 100 a week, 100 a week. And again, 75% is the 3,600. I'm saying take off 10%, $480 out of the 4,800, and that's your claim for now. In the most simplistic terms. Next slide, please. So The assumption, this is a bit redundant, is that everybody either has applied or will apply. You know, the government quite reasonably says, hey, if we made this automatic and quote unquote free and you get to take it, then they get to assume that you will. You calculate your total subsidy, you print it out, and you're then moving into the application process. Again, this is a slide that we carried for several weeks now, and I hope it isn't too repetitive. Next slide, please. So again, then you move into the actual online application, and you have your printout. It only asks for about 4 pieces of info, 4 numbers, and it asks for 2 names. It asks who's submitting it, and it asks who the senior official is that's signing off. So that will normally be it could be an administrator or bookkeeper or whoever has rep access to your books. It could be Clyde, if you're one of his clients, who's filing it, but then the name he puts on there would be the treasurer of the church, or it might be the clerk of session. But this is all based on you having the online access that's needed. Next slide, please. So we keep recapping this. There's the 3 ways: my business account, the representative approach, and the online where you just go in and ask for a code. And each of these should work. Where you bump into problems, the most problems, is where someone in your past at your congregation has actually gotten this account and then not told their successor, or no one knows who it is. In a treasurer workshops for years, I used to think this was funny. I would say that how many of you know who your person is? No one put up their hand, and then we would have a wager on whether 1/3 of all registered CRA names would be deceased.
Mm-hmm.
I mean, that's morbid humor, but that's how out of date and how relatively careless we've been about this. And now we've all learned that it's pretty important to get this up to date and frankly, keep it up to date. So the key message here is I've got a couple of folks who are going to be training with Clyde on Monday morning. And we're going to try to have some sort of concierge type help desk service for navigating the problem situations. We'll give you the best advice we have around how to get registered so you can process these claims. We've got new information from your experiences. People are reporting back, and that's so important. That's how we got the T1235 business about why so many people had no valid trustees. We also find that people have phoned, if they're getting a better level of follow through and service by phoning, say, the Charities Directorate, will be able to let you know what's working best. So that's coming next week. Okay, and let's keep moving. I'm seeing comments from Susan around the notion of filing the T3010. Absolutely, if that becomes the way to fix it, the fastest way, though, we are being told so far is, and believe me, you will get different messages from different phone calls. That's true if you phone the church, and it's certainly true if you phone the CRA. We're working on that. So attestation, I'm not going to spend any time on that. We'll keep moving, but basically every one of these programs, including the ones Kendra just introduced tonight, somebody is going to be saying, yes, we're playing by the rules. Yes, we're eligible. Yes, we have the records. Yes, we're a legitimate tenant. Yes, we have a, whatever the it is that you're supposed to say. Each of these programs has someone signing off on what is called an attestation. Next slide, please. I must say this Winnipeg Jets shirt doesn't breathe as well as it could. Not a criticism, I'm very appreciative of the gift. Okay, so again, you got the attestation. Clyde took us through all the different boxes and so on, and I'm not going to go over that again. You'll figure it out, or we can have a separate webinar on the 5 or 6 attestations that probably exist by then. Next slide, please. So if you're, again, this gets into the online stuff. I am asking all our congregations to give their bank information to say the general counsel office, so that already we've made have a program where every single mission support check, mission support that is issued is now electronic. We made that a mission. One of my team, Diana Hacker, was chasing folks and probably badgering them to be electronic. But they're glad now, because every one of those folks gets their money within 2 or 3 days of when it was supposed to be there. Same thing for all of us now. If you're on a loan program, for the government, there was never a reason particularly to have, give them your bank information. There was only the HST rebate. But now there's all kinds of stuff that if you've given them your bank information, if you're using this My Account, we might as well get used to the new way of doing business. So this is how it's going to be reported. We've had several questions about, is this income, does it affect the calculations? No, it doesn't. It's all going to be reported as government income and on the T3010 for this year, and on individual tax returns. They're still trying to figure out how that's going to work, but eventually there's going to be some information that links our claims to individual T4s. I'm still amazed to see how that's going to work.
So sorry I'm late.
Oh, it's 8:10. Okay. What I can't stress enough is the audit stuff. Keep a record of every single assumption you've made on your revenue testing. Even the calculation of eligible remuneration. And frankly, we are going to be doing this in a good faith way. I am 100% confident that the government is going to have transgressors to look at that won't be the church. So, a rounding error here or there is not going to be a big deal. Next slide. In fact, I don't even think they'll be able to get to it. So what are the most common questions we've had? And the most common questions we've had have really been about trying to get registered with either My Account or as a representative or as or using the online access code. So we're doing some more work on that with the help desk service that we're going to try to provide. But what wages do I use? And this is eligible remunerations. Okay, so all amounts taxable to the employee, except if there's a manse. Okay, a manse is non-cash. Some folks have asked, well, hold on, what about the employer portion of CPP and EI? Those are costs. Why don't those count? Again, this is focused on the employee and does not include what I call employer contributions to various programs. What number do I use for the 10% subsidy? Okay, want to stress, okay, it doesn't matter what ADP sent you. What they sent you will depend on whether you're a quarterly or monthly remitter. It'll depend on the size of your income tax bucket. It'll even depend on if they did it correctly. The easiest thing for you, if you're a 75% wage subsidy applicant, is to just take 10% off the top and then track that number to how many employees you're claiming for over the period and whether you're getting to that 1,375 maximum. But that's the easiest way to do it. That means you can claim right away. Now, what if not on ADP? Again, the message there is there's a limit to what we can, there's so many unusual circumstances out there. If I was you, I wouldn't be in that circumstance. I changed my own church off of that a few years ago because it was just double work. And, ideally you'd have everyone on the same payroll system so that it's going to work the same way, whether they're government programs or whether it's being up to date on everything from deductions to policy and government changes and so on. So those are the common questions I've had. The next slide should be asking you what we missed in terms of questions.
I'm not getting a lot so far. One question that's come in about the 75% program. What's the revenue test going to be for period 4?
Speculation. I'm not even going to speculate there. One could assume that it might continue at the same 30% level. I don't think it'll go back to 15 for sure. But it's just a guess whether similar rules will apply. The same goes for the carry forward thing, where you get a 1 month pass on revenue. So if you qualified in well, again, the months we're talking about right now are March, April, and May. If you qualified in May, it would be reasonable to think that you might automatically qualify in June under the program extension, but we do not know that yet. And we do not know if the test is 30% either. Educated guess, yeah, it might be.
Thank you. Marion Penny's asking, are pension contributions eligible for the 75% subsidy or just the gross salary?
Again, pension contributions are employer contributions. They are not, benefits generally aren't part of this. To the extent that the employer has a group benefit plan or makes pension contributions, that is not eligible remuneration for the purpose of this program. It is very important and attractive elements to retaining people, but it doesn't go to the employee to spend.
So Kathy Sullivan's asking, the maximum queues is $847 a week, or $33.88 a month, for which the maximum is allowed. So she's not sure how you use 75% of the total gross salary.
Oh, I'm sorry. Maybe I should be. I've always assumed that people are. This is where maybe Clyde's phrasing around eligible remuneration comes in. When you fill in the spreadsheet, it automatically calculates the 847 maximum for you. So you have to go to the spreadsheet and input all your data, and that's what the 75% program runs on. To the extent that there's a cap, meaning that they don't fund the highest salaries, that's just the way the program runs. And I apologize if I've been using too general a language. The spreadsheet will do that for you. So
if the cap, though, the 847 a week cap, that's for the 75% program, but 10% of your gross salary could be more than that. Is there a cap for the gross salary for the 10% program? Some people are being paid more than the cap.
The 10% program not only doesn't have a cap, it doesn't have a floor either. You're allowed to have you're getting the same maximum of 1,375. If you have like 10 people or working 2 hours a week, and your income tax bucket is big enough. So in short, the 10% does not have that kind of limit. The 10% program is 10% of your salary, your remuneration budget for those 3 months. That's one cap. The other cap is 1,375 per person.
Okay, thank you. Here's another situation. Paul McAllister asks, we qualify for the March 15% revenue test. We did not qualify for the April 30% revenue test. So should we still apply for the period 2?
You apply, yet you quote unquote qualify. Okay,
you qualify because you qualified in March.
That's right. You get the way. I mean, this is loose language, but the regulations specifically say that if you qualified the month prior, you qualify the following month. In Paul's case, he would need, in order to do a claim in May, the May revenue test would have to be met of a 30% reduction.
Right. So if he met the test in March, he gets a pass for the test in April, even if he wouldn't have met it. But he has to requalify in May.
That's right. You have to ask for the money, but you don't have to pass the revenue test. in April in your example.
So Tina Coates asked a little while ago, there's all those elections for kind of odd situations that you have to tick off the box in that 75% program. Have we got any kind of documentation in easy to understand church language about what those mean and how we're supposed to answer it?
Yes, Tina, I glossed over it today because we have done it in prior weeks, but Clyde has a slide literally on that saying you can ignore this box, you can ignore that box, this box means this. And I think what we can do is even, put up an attestation how-to online.
Okay.
So we can look after that. Remember that you don't have to file the attestation, you have to have it available.
Yeah. Good, thank you. People want to make sure they're not doing it wrong. So if you qualified in March and April for the 75% program, now for May, would you get a free pass for May because you actually qualified for April?
Yes.
Okay. Good.
And we think it might work that way for the program extension. There's a 12-week extension now to August 29th. So there's going to be three more 4-week, I think, claim periods.
I'm not seeing any other questions on my list, Eric. So unless you're seeing something I'm missing, I think we could carry on.
Okay, keep going. So we're almost done, folks. Again, just a reminder, the wage subsidy stuff that doesn't require regional approval or anything else. So we're just trying to help everyone get through this. For loan applications to the church, and for that matter, to if we become eligible for the federal loan program, any loan approvals do require both the congregation board, first of all, to approve, then the region. Next slide, please. So I just want to stress that it's okay. Like if you're feeling a little unsettled because you don't, your ADP expected amount is out by $3 or something, or even if it's significantly out, or if you misfiled your first application, the government can't blame you. Okay, they literally can't, because the rules have kept changing. So the main thing here is best efforts, okay, and documenting what you submitted and why, what revenue calculation you made and why. And there's going to be a reconciliation. ADP is going to give us a 10% reconciliation when that's done. Probably in the fall, we should figure out, you might want to add up all the different things and that you claimed on the 75% and see if it all hangs together. But the point being, right now, you will have seen the debate in the House of Commons around whether there should be more fraud protection up front. Right now, the issue is trying to get support to deserving folks. The message is, we will take you at your word, and we will have audit processes later on. And the focus is getting this out and the best intentions of all involved here. So I just would not, the normal meticulous standard that you would hold yourself to in your daily, your regular treasurer work, you try to stick to that as best you can, but right now it ain't all going to be like that. So a lot of stuff is going to happen later on in the year, and the government has said as much too. They're going to figure it out. Next slide, please. So process the 10%. We've talked about that. You can choose not to. If you don't need the cash, maybe you've made that decision, okay? The most important thing, though, is to determine your 75% subsidy eligibility for each period. And again, whichever way you choose to do it, you're locking it in, okay? So if you can't sit there and say, okay, I want to use a different period a couple of months in because that number works out better for you somehow. You're either comparing to the average of January and February 2020, or you're comparing to the prior month. and you're locking that in. The spreadsheet's really good. You can use the ADP spreadsheet for the 10%, but right now I wouldn't even bother with that. I would just say 10% off the top and then track how you're doing to maximums. Keep moving. Next slide, please. Complete records. So a couple of things here. We've got the payroll contact. If there's something about the 10% that you just can't let yourself trust in the short term, despite my admonition to do so. Deferring assessments is there. Suspending church loan payments, stewardship queries, the church emergency program. I hope to have some email addresses and a process for you next week around a help desk function. Clyde is going to be involved, training up a couple of my key people. Carla Hacker and Rose Camborne have volunteered to help out with this. So we're going to have a bit of a sort of a problem-solving session that we'll make available to you for where you have those unusual situations, and we'll try to have the best information we can on what's working based on what folks are reporting back to us. So next slide, please. So I've been, those of you who've been on this thing ride for the last 9 weeks with us will know that I've had this, we're in the same boat slide. And I saw this on the internet a couple of days ago, and you know how everything's just true on the internet, but we're not in the same boat. So this page and next is just a recognition of just what everyone's going through, and that we're in the same storm, but not necessarily the same boat. You know, I'm very fortunate to be comfortable where I am and healthy where I am, and you know, for some quarantine is fun, for others it's desperate. So this is from the internet. There's another slide after this one. Maybe we'll leave this up for just a second, but no, that's fine. I wanted it to be there because I've been saying we're in the same boat, and my message was we're on the same team. We're trying to work together through this, but that we all need to realize that we're all coming at this from all kinds of different places. We're on different ships during this storm, experiencing a very different journey. And I just wanted to say that we should realize that and be kind. So that's my attempt at a pastoral reflection at the end, take the pressure off Steve a bit, and just thank everyone for working with us and also sharing information, reporting back and suggesting stuff. We need that now more than ever. And thank you, everybody.
Okay. Thank you, Eric. Bravo. So there's one final question on my list now, and Kendra's answered it in the Zoom chat, but it actually came from YouTube, so I need to ask it aloud. And that is, what if our tenants are actually residential tenants because we have a building that leases an apartment to somebody? What do we do with that, Kendra?
Yeah, so those are not commercial tenants. That's where that language of commercial comes in. It refers to business. So there is language on the CMHC website in regards to live-work units, and that was in relation mostly to Artscape and other hubs that have places where people both live and work, and they have an eligibility of a sort that's on the website, but not tenants who are just living in their spaces.
Thank you. Last call for questions, friends, and we'll wait about 45 seconds because I know you folks on YouTube won't hear my invitation right away. But we've come to the end of our program. And so if you have any last minute questions you'd like to pose to our experts, now's the time to get the fingers going and type them in as quickly as you can. Meanwhile, I'm going to take the opportunity to thank these folks. Clyde, we're going to have to put you on the payroll. I don't know whether it's obvious to folks that Clyde is a volunteer, and what a remarkable volunteer contribution he's made. I think we really need to recognize that. And I mean, the church is run by volunteers, right? And most of the folks who are participating here are also volunteers. We could not do God's work without all of you. But I did want to recognize that, Clyde, because I think everybody else that Eric thanked tonight, our staff, and we're grateful for our staff too. I think it's an extra kudos to somebody who is put this much time into it as a volunteer.
Thank you, Stephen. And I was talking to one treasurer out east of Toronto this afternoon for a while, and he thought I was on staff.
Well, there you go. Maybe you ought to be, but I think we've got a hiring freeze going on or something now. Anyway,
Eric will put one on.
there we go. And also to acknowledge Kendra, who has come on tonight. And I know, Kendra, you've been connecting with Eric all the way through this, and we've been hearing around the edges about the contributions you've been making and the way he's been consulting you. Lovely to have you with us tonight and to actually be able to hear the work that you're doing and that you have been doing on our behalf behind the scenes. Thank you for all of that.
If I may, folks, right now we're talking about at what point these webinars cease to be useful to you. We're happy to do them. I actually think that we might invite Kendra back a time or two when we start talking about re-entry and making our building available. We're going to have to make our buildings available to certain tenants long before we gather to worship. So we expect to be, sharing, some information and best practices on that in the coming weeks and months. But also, I think we probably will have at least one more weekly next week, if for no other reason, to get us up to around 10. And then we certainly anticipate keeping this going at whatever frequency is of value to folks. It might be once a month or twice a month, depending on what's happening. I no longer will predict things slowing down, but they will be different. So thanks again, folks. If there aren't any questions.
Yeah, I'm not seeing other questions, and that's great. We will certainly keep everyone apprised of what we're doing through our email lists. So watch your email, make sure that emails from the United Church are not going to your junk folder, because that's how you'll hear if we have new things to tell you about. Let me remind you that tomorrow afternoon, we're offering a webinar to ministers. Tomorrow's program is going to be about outreach and how do we behave like churches, not just taking care of our own business, but in the world. Folks from the Edge Ministries are coming to tell us some stories of some really creative churches who have found the pandemic not just a burden, but also an opportunity. So we'll hear some from them and invite ministers and church leaders to do some creative brainstorming. The week after that, we're probably going to be talking about first stab on church buildings. We're looking for resource people and leaders right now, Eric, and I'm not sure exactly where that's going to go yet, but that's kind of on the drawing board. So those topics are coming too on the Thursday program. Friends, we're going to say goodnight. Thank you from here in Aurora and from all the other places represented on our leadership team. We're glad you were with us. Blessings on your ministry, and we'll look forward to seeing you next time round. I'm going to take our leaders into a breakout room so that they can debrief with each other, and we'll say goodbye to the rest of you. See you next week.
Thanks, everybody.